Welcome to the Wealth Stream Podcast. The team at Hightower Great Lakes share their insights and passions for empowering their clients to live their best life. In this energetic podcast, we will take you on a journey to help you navigate your financial future, overcome life's challenges to reach your financial goals, and find the financial clarity you've been searching for. Let's explore the downstream impact of your wealth and what it means to you, your family, and your community to live greater.
Hello and welcome to the Wealth Stream with Tim Scannell from Hightower Great Lakes. Today we're going to be talking about advanced planning. Good morning, Tim. How are you?
I'm good. How about yourself? It's just a little cold here, but that's why we choose to live here, right?
Yeah, that's not why I choose it, but that's okay. No, it's chilly. I'm looking forward to springtime and warmer weather for sure. All right, so today is advanced planning. What caused you to say this is a good podcast?
A lot of the planning we follow the formalized certified financial planning processes we've talked about in previous podcasts, where we meet with clients and we gather their information, we prepare the analysis, we kind of create a chart of a course of action. Then we set up a process to monitor it, change it as client's situation changes. But sometimes when we go through the data gathering process, when I have a plan in place, sometimes things change and it affects their estate planning, and it specifically affects some of the advanced planning that we need to do for them. So I just thought I would cover a couple of advanced planning topics so that as people are listening to the podcast, if they have these situations where they're facing these problems or these issues, maybe we could offer a few solutions.
All right, sounds good. So what are your examples for today?
Well, what I'd like to get into, first of all, is just what I think of advanced planning is,
all right,
so that people understand it, and then get into talking about really tough situations like prenuptial agreements, special needs trusts when you have beneficiaries who have special needs. Also, I find there's a lot of instances where clients want to control the distributions to beneficiaries and their heirs through their estate plan. So these are more complicated and more advanced. So I just wanted to kind of go through that.
All right. Sounds good.
So what I'll start with is that when we talk about advanced planning as compared to the core CFP or other planning processes, we're really focusing on using taxes, tax law, which changes, also working with the client's attorneys and trust officers to make sure that we're leveraging all the rules to make sure that we're following all those rules, but maximizing them to, if possible, minimize taxes, structuring assets to protect them from lawsuits, protect them from divorce. And there's really three main areas. One is we're trying to enhance the wealth. We're trying to make sure that during the client's life, but also when they're passing on the wealth to their kids, that they're structured properly. The plans are in place to mitigate taxes and expand their wealth. It also addresses estate planning. And like I said just a minute ago, one of the primary things I want to talk about today is the third area of advanced planning, which is really asset protection. And what we're trying to do there is leverage and use existing tax law, legal processes, legal structures to protect assets, not just now, but also into the future as the beneficiaries, inherit those assets.
So all these pieces really need to work together as one big plan. Taking one of them by themselves doesn't sound like enough coverage.
Exactly. So what happens is, as a process, we typically put together plans, and those might take 90, 180 days, 3 to 6 months. And a lot of that is just the data gathering and making sure we have the goals and the assumptions correct. The second piece, when we get into advanced planning, when we're talking about wealth enhancement, estate planning, asset protection, that these things usually take 6 months, sometimes 2 years, because they're just more complicated and they're much more emotional. So that we treat them separately. They're all integrated, but we always address them together. And we just have this constant, it's on the agenda, when we meet with clients, and we're always trying to push them along to get these things implemented.
So Tim, how important is it for a client to bring you all the information that you need? And how do you approach that so that they understand how important it is?
That's a great question. I think this is a real critical area. Like I said earlier, I think we do a nice job of doing the core plan. But when we gather information from clients, a lot of the information we're gathering is fears, goals, what they're trying to accomplish, the complications of family, complications of in-laws, and really specifically, we have a series of questions and a process where we try to gather information about, are the beneficiaries, are your children, are your grandchildren really prepared to receive the inheritance? Prepared in the sense that they're financially knowledgeable about it, they're aware of it, they're maybe expecting it, and they know what to do when it arrives, because a lot of bad things can happen if they're not. Another more difficult topic that we try to bring up early on, because timing of this issue is often the most important thing, is talking about prenuptial agreements. Very, very emotional, very, very complicated. And I have found that, if you start bringing it up early, before, the situation comes up where you might feel like you need one, it really helps. Also, through the planning process, we try to gather information to determine whether some of the beneficiaries, kids or grandchildren, have some sort of special needs. Now, that could be situations where there's disabilities, where they need to protect the assets and protect the child. It's also, I have found in the last year or two, with the opioid crisis that we're having across the country, we're running across instances where clients will say, I really want to protect the assets for and from children, grandchildren that might have those problems.
Yeah, absolutely. And that's a very personal topic, very personal issue. And there's a lot of shame involved with people that are going through it. And that's just it's not what it's about, right? There is no shame. There is no judgment. It's, hey, if this is the situation that you're in or that your family's in, this is how we can best protect you. And getting them to talk about that, I assume it would be kind of difficult until they have that good relationship with you.
Absolutely. When I first meet somebody and we start preparing a plan, oftentimes they're even reluctant to share tax returns, because we don't have that relationship. And so topics like these don't come up until much later. When they do come up down the road, we hopefully have established a relationship and, shown that we really have the best interests of the client. We're fiduciaries, not just for the client, but their family, their next generation. And we're really trying to make sure that all their risks are addressed, all their concerns and fears are addressed, because when it comes to money, when it comes to inheritance and beneficiaries, it's super emotional.
Yeah.
And even if there's not special needs or prenuptials or things like that, or even more complicated, there's typically a need for what we would call, or our attorneys we work with would call, controlled distributions. And that just means that, how the money will be distributed once the client's gone. And we want to make sure that that's consistent with the client's goals also.
Yeah, absolutely. All right. I'd like to dive in a little bit more in depth in each of these areas. And I think the first one you really spoke about was making sure that children are prepared for the inheritance.
Right. So just use a couple examples that we've run across. I was introduced to a client through an attorney about 5 years ago, and we're located in Northwest Indiana. It's I would say January through March. It's gray, it's snowy, and it's very cold. And this meeting was, I believe, in the middle of February, and I showed up at the attorney's office with the mother and a son, and the son pulled up in he had inherited, I think, $140,000 as a result of his father passing, and he pulled up in a $117,000 Lamborghini, which
in winter,
is crazy in and of itself. But if it was in Miami or LA, that would make possibly more sense. But I mean, those cars can't even survive potholes that occur where we live. So, this was just a terrible example of somebody who just wasn't prepared to receive the money. And a lot of it was just a lack of communication, because there was, I think for several years, this was a result of a personal injury. And for several years, there was a lot of knowledge, or I should say understanding, of what was coming and when was the question, but what was coming was pretty much known. And there just wasn't any planning, wasn't any education, wasn't any communication. There was no real trust established, advisors helping it was a terrible example of what can happen if there's no transparency, no communication, and planning, because those are the real solutions to preparing children or beneficiaries for receiving money.
Yeah, and so, Tim, this really hits home for me because I have a real life example. If you don't mind me stepping in here,
go ahead.
My wife and I worked for a Boys Town, and it's a facility that helps at-risk youth. And we had a young man in our home that came from a very, very wealthy family. And one of their solutions to help this young man was to give him more money and put him on a salary, if you will. It's more of an allowance. Really, he didn't do any work when he was out, after he had left our home and our facility. Mm-hmm. And I remember he inherited money from a grandmother as well, who loved him dearly and gave him a very large lump sum. And she wanted him to spend it before, I guess it wasn't an inheritance, but it was more of a gift. And she wanted to see the joy that he would have from that money while she was still living. And he went and bought a cigarette boat. And I'm sure you're familiar with what a cigarette boat is, or if the audience isn't, it's a very large, very powerful boat. And he went out and bought that. He was, I think, 19 or 20 at the time, and lived in the Great Lakes area, so a very large lake to be able to use that on. And he had it a day and a half, and he sunk it. And that was $95,000. And to him, it wasn't a big deal. He's just like, well, it happened. He had no insurance on it. He had nothing to cover it. And that was gone in a heartbeat. And the family's mindset was still that he'll find his way. He'll find his way. He'll find his way. And it speaks right back to the opioids that you were talking about. He didn't have that issue. He actually got into meth. And the last time I saw this young man, all of his teeth were missing. And he looked terrible, and his health was declining, and he had so much money, so much cash on him. I kept looking at him thinking, there's got to be a better way for you. And his parents just didn't understand that throwing money at him was not the solution. That was the problem. And it's so, the parents were so loving and so kind and so gracious and so giving, but they just didn't know how to give the right way. And it was heartbreaking to see his decline. Right now, he's been in rehab a couple times. He's doing better, and they finally cut him off, and he's actually working. So that's a good thing, but he wouldn't have gotten to this point if they had some things in place that would have protected him in the first place.
Exactly. And I just think that when you're talking about making sure that the beneficiaries are capable, making sure that they're prepared, sometimes when you read surveys, when I talk to clients, there's a fear that if I disclose too much about what we have and what they'll eventually receive, that it might decrease their motivation to continue working, or somehow it might generate, complacency. But I don't think my experience has been that. I think that if you communicate better up front and you do talk about what may be or will be coming, you don't have to be fully transparent, but to communicate better. Mm-hmm. And then you also offer some training, support, education, or opportunities to learn how to use that money and when they receive it. I just think the result is so much better.
Yeah.
And this gets into advanced planning, and this is one of the things we talk about when, usually at the next step, as we're reviewing 1 year, 2 years, 3 years into it, we're gathering more and more of this information about who do we need to protect and who do we need to help prepare.
Yeah. Yep. Absolutely.
The other area that we have, I actually worked in it came up, I think 2 or 3 times last year, but it's starting to come up a little more. It's the issue of prenuptial agreements. And again, this is another advanced planning area or topic. And I think when people think of prenuptials, they think of the news. And, just recently, for example, I think it's Jeff Bezos from Amazon is filing divorce or getting divorced. And, the commentary is, I hope he had a prenuptial. So I think people think of it as a way to, keep your spouse, from getting things. But with the way we look at it is when I work with a client and they have an asset that they really want to protect, that could be a business, but I've also had it where it's a family home. I have a client that has, I think it's a home that they've passed, I think it's a 3rd generation. It borders Canada. It's up in northern Michigan, and it's just a beautiful property. And it's not even the money for that, but it's that they want that property to pass on to future generations.
Absolutely.
And so a prenuptial in this instance just says this is not, it just outlines the fact that that's not a common asset. This is an asset for the family to use, but ultimately it'll continue passing on to the next generation so that if something does happen, it's not going to be part of a divorce or a litigation, things like that.
Mm-hmm.
I think the most common area where people hear about it, though, is really in business. And, I have a situation now where a business owner, client is getting divorced. And, Eric, I don't know if you've worked with in situations where clients are getting divorced, but it's very rarely good.
Yeah.
It's so adversarial, and it always gets worse before it gets better. That's my experience. And in this case, what they're trying to protect really, and there is no prenuptial, but now they have to fight to protect confidential data within the business. They have to fight, the attorneys trying to get confidential data from their partners, the business partners.
Mm-hmm.
It just becomes a real big mess.
Yeah, and there's other things to consider in a business. You have employees, and that's one thing that needs to be protected as well. If you own a company, you should have that mindset that you need to protect your employees in every situation as well, whether it be their salary, their health care, their employment status. And I think that would play a big part in there too. If the owner and their spouse are going through a messy divorce, if that business is not protected, that means all those employees are not protected either.
Exactly. And really what I believe a proper prenuptial says is we want to outline them in advance what the division of assets will be if something happens, what the division of income might be if something happens.
Mm-hmm.
And that something could be divorce, and it typically is, but it could also be death. It could also be addictions, like late onset mental illness, could be creditors, gambling. I've run across all of those instances in my planning career. And I mean, none of them work out well.
Yeah.
But if you have agreements in advance that stipulate, well, this is how things will happen if any of these things occur, it's almost like a buy-sell agreement within a business where you're just thinking about it up front.
Yeah. And I think so many people think about, and I'll be honest, when I was younger, when I heard the word prenuptial agreement, that was all about, well, you're getting divorced, so you want to make sure that your money's protected from your spouse because they're going to be vindictive and they're going to be, they're going to go after everything you've got and they're going to try to get the most out of the situation and so on and so forth. And there's a lot of emotion involved and a lot of misconceptions. As I've gotten older and as I've worked with advisors throughout the years, you do begin to realize there are so many more things besides divorce that can affect this situation. And so having a prenuptial agreement that spells that out makes a lot of sense. And my wife and I were on the same page when we were younger. I think I could quote her saying, a prenuptial agreement is just you planning for divorce. And that's what our mindset was, but that's not it. That's absolutely not it. And it's vitally important, and it can be explained by a professional like you in such a way that, hey, there are so many things that could affect the marriage. And it's not just a divorce, like you said, death, addictions, or mental illness. You never know when that kind of stuff is going to happen, especially like mental illness. You just don't know. So having some safety nets in place, I think, is probably the best bet for anybody.
Yeah, and in this one particular, timing of the discussion is critical. As you can imagine, the worst timing possible is when your son or daughter comes home and says, "Hey, I just got engaged," right?
Yeah, exactly.
The topic, and you say, "Well, let's talk about prenuptial," and then it's just not going to happen.
Exactly. Well, because you don't like my girlfriend or you don't like my boyfriend.
Exactly.
No, that's
because
not it.
It'll be like you said. We're just preparing for divorce, and that's really not the case.
Yep, exactly.
So the best time is really making this part of the planning agenda very early on, and really educating your children and grandchildren up front. On an ongoing basis about really, it's not just about divorce. It's about protecting assets, protecting the family, protecting your siblings. It's really about generational wealth planning more than, thinking that you're assuming you're going to get divorced.
Yeah. And Tim, you and I have talked about family meetings before. We've talked about multi-generational family meetings and so on and so forth. Have you ever had the opportunity to have a multi-generational family meeting or just a family meeting with parents and kids where maybe a future spouse is involved and you have that discussion and you talk about, what a prenuptial is and why this is on the table? Have you ever had that situation come up?
Yeah, it's interesting. I have. And I say interesting because there were son and daughter-in-laws in the meeting.
Mm-hmm.
And who did not have prenuptials.
Oh.
So it's always interesting, though, that when they're looking at their children and the next generation, they're saying, yeah, we should have that for them. So it's like, now that the drawbridge is up, no, just kidding. But so I think that, yes, I have. I think when you talk about it and, people are already married, it's too late. Or when they're dating or getting engaged, it's not too late. But if you have conversations well in advance in these family meetings, that really helps.
Well, yeah. I mean, like you said, when you're in the scenario, all of a sudden the emotions and the preconceived notions are already there, right? If you've lived 20, 25, 30 years with this idea of a prenuptial agreement is planning for divorce, and all of a sudden it's brought up when you are newly engaged, that's a huge blow to an ego. That's a huge blow emotionally because you already have that idea. And even if it's wrong, it's going to be much harder to change that mentality than if you have a conversation all the way along.
Yeah, I agree.
Okay, so again, what are the solutions to this as far as how?
Well, the solutions are things we've talked about in the past, which are family meetings. But even if you're not having formal family meetings, it's talking to my clients, talking to the grandparents, the parents, and getting them on board with being better communicators about training, education, what's there, and why. Why do you need to protect the business, or why do you need to protect the property or these special assets? And I think when you get the parents and grandparents on board with a communication plan, and we've talked about that too, which I really think is important, transparency is always better. And again, clients resist fully disclosing what they have often. I would say that it's just better to be transparent and disclose more than less, because that's the way to prepare them. And especially as it relates to prenuptials, you want to start early, well before they, fall in love.
Yeah, absolutely. Now, a prenuptial agreement is one document in a set of documents that every family should have, in my opinion, along with a will, along with advanced directive type documentation, along with trust documentation, things that will protect the assets in multiple ways from multiple angles. Is there a list that you can put together or have that you could make available for the listeners that are some what you would call maybe your top 5 list or top 10 list of documents that you should have in a family?
Absolutely. We actually put together a white paper on this topic, and we have a checklist that we use. I'll make sure that we put it together and get it on the website for people who are listening. Yeah,
absolutely. All right. And I know that we're running low on time and you've got a couple other things to cover. I know that we were going to talk about planning for children with special needs, which is highly important, incredibly important. And then the fourth topic, I think, was something about controlled distributions. Is that right?
Yeah. So controlled distributions relates to, if you didn't do the prenuptial, if you didn't fully prepare the kids, or if you didn't, set up that special needs trust, how to make sure that you can protect the children through controlling how the money's distributed. Yeah, let's do that. Let's split up and maybe set up the next podcast to cover the special needs trusts and related issues, and also the controlled distributions.
Yeah, I think that would be great. And then I'm gonna put it to you, Tim. Can you give your website out where they can get that white paper at?
Yeah, so you can always reach me at Scannell, Scannell, at hightoweradvisors.com. And if you go to Hightower Great Lakes, you'll find us. And then there's all kinds of resources there.
Fantastic. All right. Thank you, Tim, for your time. This was a lot of great information and a lot of stuff to think about.
Great. Thank you very much.
You bet. And thank you for listening to the Wealth Stream Podcast with Tim Scannell. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Tim comes out with a new podcast, it'll show up directly on your listening device. This makes it much easier to share these podcasts with your friends and family. And if you need an easy way to get this information in front of somebody, this is the way. Share this podcast. If you know somebody who needs, maybe their kids need a prenuptial, or you guys have talked about they don't know how to introduce it to their children before it comes to that point where they bring home that special someone, share this podcast with them so that they know that Tim and his team are well-versed in this topic, know how to handle it professionally, personally, removing a lot of the emotional issues there or the preconceived notions. And he can just honestly say, hey, these are the things it does. These are the things it doesn't do. And it's pretty powerful. So share this podcast with them. It'll be a big help. And you look like the good guy instead of somebody who's saying, hey, your kids need a prenup, because that could be taken the wrong way.
And Eric, if I could just add one more item. So just a disclosure and make sure everybody knows, we are not attorneys. We're not practicing law. But we're CPAs, CFPs, and we can do all the planning. We can integrate and work with your attorneys to make sure that everything's properly documented.
Absolutely. And that's something that Tim has said on podcasts before, is that they are not looking to disrupt any relationships. They're looking to strengthen them. So if you have a family attorney, Tim and his team can help strengthen that relationship by pointing in the right direction and helping you to understand, or helping them to understand exactly why these type of documents are so important, and then bringing you right back to the attorney who's going to draft those for you. Again, thanks for listening today. For everyone at Hightower Great Lakes, this is Eric Johnson reminding you to live your best day every day, and we'll see you next time.
Thank you for listening to the Wealth Stream podcast. We hope you gained some valuable insight that you can apply to your life and share with others. Please don't forget to subscribe below to be notified when new episodes become available. And don't forget to live greater. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Hightower Great Lakes. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Hightower Great Lakes is a group of investment professionals registered with Hightower Securities, LLC, member FINRA and SIPC, and with Hightower Advisors, LLC, a registered investment advisor with the SEC. Securities are offered through Hightower Securities, LLC. Advisory services are offered through Hightower Advisors, LLC.